Well, hello there, and welcome to yet another live broadcast on the Merge. It's not exactly a roundtable episode, although we are at the roundtable, and it is Friday, and this is the time we normally do a roundtable. But I'm here with Frank Kushner, and we're going to talk. Maybe we'll talk about a bunch of stuff, but I wanted to talk a little bit about the live broadcast that we're going to do next week at the North American Blockchain Summit.
Yeah, I'm looking forward to it. There's going to be a lot of talent there, a lot more people than originally intended, with many presidential hopefuls.
Yeah, quite a few. All right, stick around for a second, and we'll be back and talk about it. So, did you go last year?
I did not.
I did not either. I was unavailable, unfortunately.
I'm not sure where I was. I don't know where they had it last year, but I've been to a bunch of the different things, but I didn't.
It was Austin last year.
Yeah, that's right.
Okay, yeah.
That was another reason. Yeah. It's kind of. It's
interesting. This week is a week where I would normally be up in New York. There's a fundraiser that I used to support a lot called Gilda's Club, which was cancer victims. And anyway, it was really interesting because they normally have it every year. They have it, and we didn't go today.
Yeah.
We didn't go this year. So, yeah, now we'll do that.
Now we'll do this instead, yeah. So it's an interesting event, North American Blockchain Summit. It is put on by the Texas Blockchain Council. If you're not aware, it is Texas Blockchain Council is a big partner with Harper Belmont Studios, the place in which we film all this lovely goodness. Mark Schutt, our frequent co-host here, works there with Lee Bratcher, their director. Mm-hmm. And so that is why this seems like it's probably going to be a policy-heavy event.
Mm-hmm.
The Merge is apparently, I've been informed this morning, Sohail, we're going to be throwing some sort of a cocktail event one of the days there.
Yeah.
With Polygon and a couple of other big names and medium-sized names.
Fair warning to the guests that sit down next to me. I'm just going to go throw this out there right now. Anybody who wants me to ask a tough question, give me some questions to ask. If they fall into our net, I'm going to ask them some fun ones.
I mean, I've got some tough questions for some of if we can get. So I don't know who we're going to have yet. We're still putting the schedule together. Our goal is to have every one of the keynote speakers at least have right of refusal to come on our show.
Mm-hmm, mm-hmm.
So that means RFK and Vivek Ramaswamy, Ted Cruz, Cynthia Loomis, these headline speakers that are going to be there are going to be possibly coming across our desk.
I guess I'm going to have to suit up for once.
Yeah, may have to wear. Yeah, I may have to pull out the old Dr. Bitcoin outfit. Yeah.
Yep.
But so and we've talked about almost all of those people. Mm-hmm. And more on the show, and had hard questions in our mind for them, at least.
Yeah.
So I mean, with Cynthia Loomis specifically on the crypto thing, her recent kind of puzzling comments during the recent hearing that Elizabeth Warren called for with the Hamas funding via crypto, whatnot. There was some puzzling comments from Cynthia Loomis we want to get clarification on.
I think I can say this. We were on a call with. We were talking to Patrick McHenry,
mm-hmm.
and he was just. We asked him about that, and he was like, "Yeah, those numbers were false. Don't know where they got them." So
right,
he's not going to be there, but
isn't he? I thought no, that's right. He was. That's why he was doing the call, as he couldn't make it in person.
Yeah,
right.
Yeah. But that was interesting just to hear him say flat out, like. But obviously, there's some. I think there's some animosity there between Warren and other parties.
Two different political parties. There's going to be some animosity. But Loomis is a Republican, so
right.
Her comments seemed out of pocket for the. I mean, she's big blockchain.
You had some theories as to why. Are you going to try to get that in there?
I mean, I probably won't tell her what her reasons are and tell her what my theories are. I want to have her explain it, I don't want to be accusatory, although it will be, I may
There
throw a
sure
couple.
is, yeah. I think that one of the benefits of having this platform, this zealous pundits that we are,
Yeah.
is that we can actually ask like honest questions. Like we're not here to color their minds and come up with our ideas. Like, hey, if we get this opportunity, which we're going to get an opportunity, hopefully, we can ask the questions.
Right.
Yeah, we don't have to be political about it. Just curious.
Yeah.
What do you think?
Absolutely.
Talk to us.
I mean, there's also a fair amount of apolitical corporate enterprise folks that are going to be there as well. A bunch of influencers. Peter McCormick. You know who else is going to be? I just learned. Can we say the pundit that's going to be interviewing? Is that public knowledge yet?
No, I don't think so.
Okay, never mind.
Let me confirm.
Someone cool, maybe? Someone cool?
Depending on who you are, you might think they're cool.
Yeah. Howard Stern? No.
You could say an OG political commentator, internet commentator.
Yeah. I'll tell you off the air. It's funny. It's funny. Andrew Yang. Andrew Yang shows up at all these blockchain events now, though. Like
We're besties. Me and him.
You are?
Yep.
That's nice.
He always remembers me. Like, that's cool.
That is cool. I embarrassingly with Sony, right? From with Josh, and I was on Josh's show a couple months ago. Sony and I rode up an elevator with Andrew Yang in New York for NFT NYC, and like neither one of us knew who it was. And then like we both got out, and he went up to the stage, and we went out to the crowd, and we're like, oh.
Speaking of NFTs, I just wanted to say I'm a proud owner of my. Well, no, I've minted many NFTs.
That's
Check
true.
me out on LimeWire at Light Leaks. But proud owner of a what's it called? Chimpson.
A Chimpson.
Chimpson NFT.
Is that a Bored Ape-like thing?
It's I don't think it's
like the
related,
Simpsons.
but for some reason these NFTs are all kind of monkey adjacent.
Yuga Labs, yeah.
He goes up to me today. He goes, "Hey, I have a Chimps. I'm a proud owner of a Chimpson," and I'm thinking, is this like a
chimp with
is it like a
Simpsons?
microphone brand I'm supposed to know? Or like what's going on? But it's actually pretty cool. It's decent art.
pull
I
it
like
up.
it. I like how it looks. Yeah. Okay. So, I have been doing research on some of these folks. Have you gone down the speaker list yet?
I have not gone all the way through it, but I've
Okay.
seen so many people that are really fascinating, and that's just, I can't wait to talk to some of them. Biology, there's like just so many really fascinating people that are going to be there. So.
It's going to be a lot of the same people that you talked to when you were at Consensus. So, I mean, a lot of those same exhibitors are reprising here to kind of be on the deal flow and on the policy side of the discussion.
Yeah.
So, who from those conferences? Because I know you were doing all stuff all over the place. Who from those would we like to highlight or bring into the conversation here?
Well, gosh, I mean, I hope there's somebody there from CoinDesk, because they always have really, news-heavy coverage on crypto. So we definitely need to reach out to Casey over there. And gosh, I don't know. I mean, I'm looking forward to talking to all of them, because it's, I feel like we're kind of at the end, hopefully, of this crypto phase, this crypto winter.
Right.
And I think that there's a lot of people that are really hoping to push it over the edge. So we'll see. I'd like to see what anyone has to say, especially, getting ready to go into that 2024, the political race. And so now all the gloves come off, right?
Yeah. Well, I mean, so as Loudmouth yesterday on Mark's show was pointing out, that's not a pejorative. That's his name.
That's his name.
Loudmouth.eth. He was pointing out that we've been in a kind of a 12 months of a bull when it comes to crypto already. Like,
Sure. Yeah.
every month has been higher than the previous since last December. So doesn't feel like it though, with all the negative news that's been coming out.
Right, and you also have to look at where it came from, right? So people are like, but does that make a difference? Yeah, it makes a difference when you got it in the 20s, right? And now it's in the 30s. So it's full third,
Yeah.
Sneaking quietly up there. Something else in the news cycle is more important. Most recently, we've had that, I'm not going to call it a failed auction, but a terrible, terrible long-term auction. We know that that auction came out yesterday, and it was just not good. And, I don't think our overseas friends who technically finance those 30-year mortgages are interested in paying our short-term obligations with this long-term debt. So they pushed the yields up a little higher. That spooked the market a little bit. But today everything seems fine. I think everything's back.
Yeah, we're back, baby. No, I was actually going to pull that up at some point in the conversation because I don't understand yield and bond markets at all, other than that I understand what the financial instruments are, but I don't understand the significance when an auction performs poorly or better, even what that looks like. I did see a thread on Twitter this morning that I'm trying to find my bookmark for, but I can't. But it was essentially saying that the markets have filled the delta of what was expected to happen at the auction and what didn't.
Yeah, it appears to be. That the professionals also are a little confounded as to what it means to raise interest rates as well.
Yeah,
because it's
what's going
not
on?
Going as
what's happening?
It's kind of not going to plan. So there are a lot of theories behind it. So you keep hearing about these long and variable lags as to the effect of the interest rate policy that the Federal Reserve has been doing, and some of the thoughts are that we just had too much cash out there from the stimulus checks. But then again, there's also some consideration that the U.S. consumer, has pretty much locked in all of their long-term spending, with the exceptions of the new people, the new households being created. Because if you hadn't refinanced your existing mortgage 3% or some cases sub 3%, that was just poor planning, and maybe those are the people that end up having to sell, I guess. But ultimately, maybe interest rate sensitivity is not what it used to be, because people have locked in those long-term rates and people don't have to move. It used to be that you would have to move for a new job if you lost your old job, but now everyone is pretty much okay to stay where they're at, and no one seems to be as adventurous to leave when you're going to have to, half your size or double your check to live in a place. So, that's causing no small amount of concern. And when you take a look at the 30-year Treasury, and I don't know what it filled exactly. I think it was like in the high fours, but it was higher than it was actually trading at, which means that, the demand for it was much. They wanted more. They wanted more for the risk. Let's see if I can find it here. But it's pretty worrying, because the dealers are not going to do this again next month after getting stuck with these rates. The U.S. Treasury auction off $24 billion of 30-year bonds at a high yield of 4.769, which was higher than the yield was at the time. So it's troubling, because the things that the tools that the Federal Reserve had before to use to try to slow down inflation don't seem to be working. And even when everybody says don't fight the Fed, they're fighting the Fed. Everyone's fighting the Fed. If you're expecting stocks to go up and you're willing to pay 30% higher for my coffee than it was about a month ago.
Is it really?
It really is, yeah. Yeah. So I don't know. I don't know what's going on. But it's It's not helping. Inflation is still here. Inflation is still high, and they're going to keep raising rates, and that ultimately is going to hurt the companies that are actually borrowing, as opposed to the end user that they're supposed to be telling to stop spending.
But okay, so if we're on the topic of inflation, I've got so many questions, and this is going to be an interesting perspective probably to brush up on, because the crowd that you're going to be speaking with on camera next week is all going to be coming from this largely Austrian Chicago school economics that's similarly puzzled by the actions of the Fed and the larger market.
Good. We'll be just sitting around the table holding hands and crying and
right.
crying. Why is this happening? Math is supposed to work.
Well, the question that I have is that we've during the pandemic, we tripled the money supply essentially through stimulus checks and the bailouts. That was all backstopped by the Fed, and you can look at the Fed, the Fred charts, and it shows the increase in circulation. How can you print that much money and expect tweaking interest rates to not to like curb that level of inflation? Like does that not seem like the bigger problem?
It's not just that,
or rearranging deck chairs. You know what I'm saying?
It's just not. It's not just that. Like that is just one of the troubling things that happens. We just are used to. We're like the leadership of many of these companies, the C-level executives of many of these companies are working with such a challenging headwind. Higher borrowing costs, higher rates set by the Fed means higher borrowing costs, and those higher borrowing costs, pay for things like payroll. And as a small business owner of formerly of an accounting firm, we got paid 4 times a year, right? You get paid October 15th, September 15th, April, and March 15th, corporate and personal tax filing deadlines. And you rely on that income to be normalized throughout the year. So you have to budget, you have to save, you have to do that. But if you can borrow at interest rates that are, 0 or close to 0, you didn't have to budget as much. You just needed a line of credit. But now with tightened conditions, who's actually suffering? The companies are going to suffer, and they're going to suffer once they actually get to a low point where they have to go out and try to get money from the public market.
That's what I'm saying, though. But it feels like it's just unnecessary.
The companies are the ones that are going to suffer, in which case then they lay off people, and then those people suffer. But you have to remember, we have some pretty decent fortress balance sheets because of 2009, and people didn't sell out a bunch of interest, long-term loans, or, everyone's been able to finance at a pretty low rate across the yield curve. So I don't think that the money shock issues have actually started to happen at these companies, and the only people that are really hurting are the professionals that are out here going, why aren't the stocks going down? Interest rates are higher. It's supposed to be telegraphing that should, and that
also goes back to the thing I'm saying, like, right, well, with the stimulus, it wasn't just like a $3,000 check that we all got. It was like American Airlines got a huge chunk of money, right?
They did. And also the individuals are starting to burn through all that, right? And then you've also got the headwind of now people are going to have to start putting their, paying, if they didn't get forgiven, they're going to start paying their student loans back. And so there's a big headwind. We've got all the conversations about all the IRS. I can tell you that I thought I was going to get money back, and it turns out that they said, oh, no, you owed for some years back behind. I was like, well, I don't think that's true, but we'll have to have that fight later. But what's going to happen is, like, you're
just going to pay it because you don't want to know.
It's already been paid, but then it's, to fight back, they're going to keep saying no, right? So ultimately, it's just like you see all of these former tailwinds becoming headwinds. And we had stimulus checks, we had really low credit lines that have been able to be utilized. We have student loan payments coming in. People have spent most of the savings they had, and employment hasn't slowed down at all, and inflation is, well, it's come down, it hasn't stopped. So we're in for a challenging time. The question is when, and that's the problem, is you can't, timing this stuff is very difficult. It's almost impossible, and everyone tried to do it because we all thought that numbers still mattered, and it turns out that those variable lags are very variable and very laggy.
Yeah. Well, I mean, it's they put their hand on the stove with the printing of the money, and then like, why are we if I just put ice on it, will it make it not burn? No, it's still. I mean, that's what the interest rates feel like. Like they're trying to do a thing that fixed stuff in the past, but they've never done. There's never been that much stimulus ever in America, anyway. Maybe there's some ancient example it happened in China that I'm not aware of, but in terms of American economic policy since the 70s, really is when they've been doing this type of stuff. There's never been that much money printed at once. So I don't know. I just am baffled that they think that level of inflation can be curbed by the same fine-tuning knobs and dials that have worked in the past on things. It's you can empty a bathtub with a bucket, but you can't empty the ocean.
Well, here's
with
the thing that's really interesting is that what those tools that they've been using those aren't the fine-tuning tools. These are the pretty big, picks and shovels tools, and it just hasn't had the same effect. It has had an effect for certain. It has definitely had, well, we think it has, but then again, it could be other factors that are having this effect, and maybe we haven't felt the effect of these picks and shovels that they've done. Because 500 basis points, 5% interest rate hikes it's massive.
Yeah, no, it's massive compared to anything in the past, but it's not massive compared to quadrupling the money or tripling the money supply.
But if you look at the variability and fluctuations in the actual interest rates on the long side, you're supposed to see pennies a day. Yields changing very little, and you're seeing massive changes, 50 basis points in a week. Those are big moves for things that are supposed to be very liquid, very safe, and stable. Aren't supposed to move. Yeah.
Right.
So there are effects, there are things happening, but we don't know what is supporting it that's keeping it from breaking. Like let's take a look at the commercial real estate market. We all know that things are weird, right? And we all know that the banks and the borrowers, the ultimate borrowers, don't want don't want to have to come to Jesus moments, but they are. Next year you're going to have a lot of coming to Jesus moments when they have to refinance these mortgages. And once they do that, they're going to say that our occupancy is down, we want a break. And if they give them a break, then, and again, I don't want to build a huge clock, but, I'll tell you more or less what time it is instead of building the clock as deep as you can. But ultimately, when interest rates are as high as they are and you're going to refinance, you have to take into consideration what the value of that property is. Especially with lower occupancy, it's not worth as much, which means there's going to be impairments on those mortgages. And those impairments are going to affect capital structures for those banks, which means it's more of those banks may become insolvent.
Right.
And that's a real problem. But everyone's just kind of, no, it's fine. It's fine.
Well, maybe that is what's keeping the markets afloat, because it's not the first appearance of... Don't want to talk to them right now. It's not the first appearance of irrationality in the markets. I mean, when we got flush with cash from the stimulus checks and retail investors were buying things like GameStop up to the levels that it was, that is... I mean, I wrote a report about it for the NCRI. Their markets have become tools of sentiment rather than accurate reflections of what a price of a thing should be.
Yeah, it's supposed to be a voting machine. It's supposed to crunch down the numbers and figure out where we really are. But I don't think it's doing a good job of that. I really don't.
Yeah. So do you attribute that to... Taking that idea, like, is it because retail investors have better access to markets, or is it some other unknown thing?
I don't know. Honestly, really, there are so many factors and variables out there that they could be right, could be wrong. I don't know if it's the resilience of the past 20 years of this Fed put, which effectively says that, if the market was going, was taking a hit like it did last time, the Federal Reserve cut rates immediately again and turned it back around. And so everyone expects that if the market does get gets hit hard, then the Fed is going to just, drop interest rates and it's going to save the economy.
Well, this is why I'm asking, is because the
they're used to it. They've been conditioned like Pavlov's dog.
But going back to the thing,
including the institutional money managers, except for the older ones.
Going back to the thing that started the conversation, we're talking about the auction yesterday versus the markets today.
Mm-hmm.
Who participates in the markets that occur today that could not participate in the auction yesterday?
So the people who are in the stock market and bond market, obviously different markets, right? Mm-hmm. And I like to say, just for grins, that people like us in the asset gathering phase, in the saving phase, the people that are not super rich are in the equities markets, right? Because we want to take chance. We want to take, we have outsized bets, outside chance of making money by being an owner of a company as opposed to loaning money to a company. Loaning money to a company is fixed income. That is typically you have, $1,000 lots, right? A bond is $1,000 at a time. You get paid more or less twice a year. That's for people that have a lot of money. So fixed income is for the rich people, and equities is for the rest of us, right? Mm-hmm. And the people that buy on the long end of the curve, 30-year treasury, is usually outside money,
right?
Saudi money, other country money, because they want to stabilize their money supply with ours, right? And so they'll lock in rates knowing that they're guaranteed that X percent, 4%, 5% over 30 years.
So maybe they're trying to call you now.
Yeah,
couldn't get a hold of me.
Couldn't get a hold of you. So that long-term debt is usually, wealthy money, and they aren't putting up with it. And usually the bond market leads the stock market when it comes to what's really going on. But that hasn't been happening lately. It's like the fixed income market is saying, we don't like it here, and the equity market is like, we don't care.
Right. So that's who typically buys, but like in terms of like who actually has access to those markets, is like literally anybody with a trading account could have access to the market that moved this morning versus the auction, or is it like an educated investor or a licensed investor?
No, I mean anybody could do the auction. You get an account at XYZ Bank, get to Treasury Direct. You can go right online and you can fund your account with your bank account.
So literally anybody could have
but you're not going to participate at the same level.
Sure.
Right? You're not
well, I'm just trying to get a sense of
the
thesis that could it be like some irrationality in retail investment, or is this
not
at the auction, but after the aftermarket, like.
Institutions are, I mean, look, the markets is like, it only takes one person to buy a stock to mark that market at that level, right? But in the fixed income market, especially at the auction price, the auctions are done by people with huge books of business, huge, massive orders. So when you get that little participation, there's, it's not a retail order that's messing that up.
Right. Okay. Yeah. Well, or more than one. Like a GameStop. Like, is there a Reddit that we should be looking at to see?
I don't know. You tell me. Is there a DAO out there that's doing some of this stuff?
I don't know. Well, I mean, so this is the other thing. So we had a brief. Lee Bratcher at TBC had a discussion with Patrick McHenry, chair of the House Financial Services Committee, last week. And one of the things that he brought up is something we talked about on the show, which is Tether's being a bigger operator and owner of Treasury notes than Saudi Arabia, like in many other countries. Like they're like whatever we said it was, number 84.
Yeah, and I'm curious though. That's like literally got to be on a specific vintage though, because I mean, they don't own. It doesn't own anywhere near what our actual debt is. 31 trillion. They don't own that much,
but
so I'm curious if it's like for a specific auction, maybe a specific vintage, a specific.
Oh, we can pull up that information because it's been trotted out quite a bit, and he was talking about that with McHenry yesterday. Mm-hmm. And the topic that I find interesting is they're looking at this as now as a tool for national security, and we're going to have potential to talk to some other people on the House Financial Services Committee next week, and perhaps talk about this topic. South of the border countries with unstable governments are using Tether on different blockchains because the transaction fees are low, the block resolution times are low, and it's more stable than their local currency, which advances American national interests overseas. And it's only possible through an independent, publicly auditable public blockchain, not a CBDC. If it was a CBDC, it would not be trusted in the same way.
Right, sure.
Or even accessible, probably.
Right, yeah.
So
we're going to go ahead and turn off your funding, Costa Rica.
Right, yeah. Absolutely going to cause a lot of adoption in Costa Rica if they could just push a button and turn it off, right? No.
Yeah.
So I find that to be, I mean, even if we probably want to bone up on those numbers before we speak with some actual elected officials about it. But it sounds like an interesting line of questioning.
Yeah, for sure. I mean, I think that my biggest concern about it is, right when I saw that, right when I heard that, the first thing I thought of was regulatory capture. It's like, okay, we're going to dictate that if you want this to be considered a U.S. dollar denominated, stable coin, we're going to force you to purchase something that's dollar denominated in whatever shape or form. And specifically, we're going to give you a list of things that you're going to be able to choose from. Here's a menu. If that isn't regulatory capture, I don't know what is.
Oh, speaking of regulatory capture, so they were talking about a bill that the Blockchain Caucus is trying to advance that defines a stable coin legally, which sounds like, I guess, a good thing if you're, if you like Tether and USDC and other types of stable coins. But I heard something in the language that I want to drill down on if we have the opportunity to talk to any other members of this committee that could potentially outlaw my favorite stable coin, which is MakerDAO's DAI or DAI, which is a collateralized debt note that is completely governed by smart contract, meaning it is fully collateralized, but it's all on-chain assets. And the language that they're using would seem to indicate that it needs to be publicly auditable real-world assets, which obviously would cause a problem there. And if I'm being honest, is the opposite direction that DeFi needs to go. I mean, because if we're just trading one form of centralization for another, that should not be our goal and endpoint. So
here's my question, though. Is like, one of the biggest and trickiest things to figure out is like, all these things like the the stable coins, for lack of a better term, for me, are just another derivative instrument, whether it's the dollar that's deriving its power from the full faith and credit of the U.S. government, or oil, which derives its power from being able to power X, Y, and Z. It's like, it needs to be tied to something. So I do see that it should be tied to something that is stable if the whole goal is to be stable to something. And it makes sense that it should be stable to, like
a real world asset.
A real world asset.
Well, so here's how the CBD.
It's got to be denominated in something.
Well, yeah, and it absolutely is. And so once you hear how this smart contract works, there's also a much longer Dash Dr. Bitcoin episode coming out, and I'm assuming a few weeks, that talks about this in detail, 30 minutes of riveting discussion about stable coins. But the short version of it is that you MakerDAO has constructed a constellation of smart contracts where you can mint $1 using their smart contract. So it's just like Tether. It's a ERC20 that sits in your wallet that says this is worth $1. It is different in that instead of it being just you got to trust the minter that, hey, we've got $1 worth of assets somewhere, you can actually audit publicly at any time in real time the assets that they say back it up. And the smart contract will not mint $1 unless it is had deposited into that vault 150% the value of $1. And if for any reason the value of the underlying assets should drop below that 150% threshold, the underlying assets can then be liquidated, redeemed with for, so if it drops down to $1.25, you can take that stable coin and get $1.25's worth of assets from the vault. So in many ways, superior to a real world asset derivative stablecoin.
Yeah, I mean, that's that takes all of the dark pool money and makes it all, hey, we see it. That's one of the things that I always found fascinating about like the CLOs and CMOs and CDOs, all these collateralized assets. It's like, how do you know? What if it's been refinanced? Like, did you really like sign on the back of it? Do you really have everybody's mortgage? I know that they had to come over to the house and fill out the paperwork. Like the minute that that's sold off into a different packaged object, like how do we know? So
the hedge fund operators from Beaumont that I hung out with from time to time, Beaumont being the place I was imprisoned. Those guys were that was like their favorite thing to talk about. It's like, yeah, I mean, dude, the reason why I'm here is because I know how to doctor a sheet. I can make anything say anything, so it'll pass an audit. That doesn't actually mean the assets are there. Why do you think I'm here with you?
Yeah, that's a huge problem among medicine, everything, right? It's like,
right. Who audits the auditors, all that stuff. So, but but you can't fool. That's not the case.
Yeah, in the case of a smart contract,
right.
Yeah, I mean, it's getting rid of a lot of the obfuscation, and
right.
It's who's paying the piper to make sure that obfuscation stays right where it is. The incumbents. Right. In this case, it's the government.
Right. And so this is why I want to have this part of the conversation with those policymakers, is because if I don't necessarily think it's even an intentional move. I think they probably had some advice from somebody from Circle or Tether, and they go, hey, this is how you should probably write that. And they don't know enough to question it because they're a politician. They're not a smart contract auditor.
Yeah, I was listening to an article, or I was listening to Bloomberg yesterday. I think it was Bloomberg, and they were talking about a politician who's in his 70s and going back to school to learn about AI. Because he wants to be able to understand more about what they're making a policy on. I said, that's great idea.
You should absolutely.
Yeah, exactly. It's like, hey, if he's willing to do it, maybe all the rest of them will go back and try to figure it out.
Shame him. Oh, you're not in college at 73? What's wrong with you? What else are you doing?
So that was fascinating. I'm like, okay, so wait, did you support the bill that came out earlier? Did you just did you put your name out? Like who? Again, I'm just like I'm joking, but I'm not. Somebody's behind this stuff. Someone's behind it, and we know it's not somebody that's used to talking about things and discussing things, right? Somebody else is behind them, telling them this is the one you want to sign.
Yeah. Well, I mean, think about and this is we were talking about this. Who was we talking about conspiracy? Oh, yesterday with Loudmouth on the interview, we were talking about Choke Point 2.0, and he goes, well, I'm not a big believer in conspiracy theories. Well, I'm not either, but humans are going to do what humans are going to do, and I know that in politics, as many other jobs, is very demanding on your time, and so it's just easier to go with the advice that you're getting from somebody else. So if you've got some lobbyist who seems like a nice guy and bought you a steak dinner once, goes, no, trust me, this is just put this, you'll look like a star. You're probably going to do it, especially if you're maybe not that smart on technology. You're like, this guy is kind of smart on technology. I want to look like a star. And I have to assume that's what most of these politicians are, because very few of them are actual scholars. They're just guys that have been in government their whole life. Yeah,
I mean, it's a pretty easy job when you're on the buy side. When you're the one that's writing the checks, it's a lot easier to get things done. Those guys they give away entitlements to keep their jobs. I think it's pretty interesting that, did you see, I think it was Glenn Youngkin this morning, who I think he's not running for re-election, and so he may actually, I don't know if he ends around somehow right now, but looking to try to get more centrist, and maybe he'll do a presidential run. Maybe he'll announce for 2024. That'll be interesting, but it'll split the vote. I don't know if it splits the Democratic vote or the Republican vote, but
it's hard to say.
The field that we're currently working with is quite polarized as it is. Maybe a dark horse comes in and does it again. We'll see.
Is Andrew Yang running again this year, Sohail? Or is he taking a year off?
No, I think he's done.
He's taking a gap year, a gap cycle. Okay, well, I was going to say, because we could have how many presidential candidates on the show? Like, we could go try to run up a pretty big number.
Yeah, hey, if we get all the more we get at once,
Right.
the others are going to feel left out.
Yeah.
Right? So, like, if we can get 3 or 4, maybe we can get another couple.
Right. I mean, present or former. Yeah.
Mm-hmm. Mm-hmm.
Anyway, okay, cool. So, what else do you want? What else are you hoping to get out of the conference next week? Any questions that you have from your perspective as a financial analyst?
I sure would like to get some clarification and clarity on somebody moving our industry forward a little bit. I know there's no agencies that are going to act on the behalf of the financial services industry, but I really would like to be able to maybe talk to a client about an asset and give them some advice if they're too heavily concentrated in a particular asset. I think it's prudent to be able to discuss that.
Right.
And it's just, you can't. You got to keep your hands off it. And I sure would like to talk to somebody about what they're thinking about, what they're doing, or do they have anybody to put me in touch with that maybe knows a little bit more about what's going on in my industry?
Who puts that handcuff on you? Like, what's the actual agency or professional association that's saying you can't do that?
Well, if I'm, a member of FINRA and a member of the Securities and Exchange Commission, they've got licenses held through those people, and they have undefined whether or not it's a currency, an asset, anything at all. I'm not allowed. Right. Yeah, I'm not allowed to give advice on it. I can't talk about it. So I feel like it would be nice for somebody to give us some clarity, because it's just a thing with a value. And if I was talking to somebody about their lawnmower or their car or a piece of art, I wouldn't feel uncomfortable telling them that, wow, that's how much you can get from that thing. That's great. What are your needs? What are your goals?
Mm-hmm.
Do you still need to hold it?
Right.
So
that is a weird position, and when you extrapolate out even further, I didn't think of it that way. So we extrapolate even further, like the situation that I found myself in, where the government said, "Well, you're not licensed by FinCEN and your state Department of Treasury to sell Bitcoin."
Yeah.
Parenthetically, because states don't do that, but okay. Mm-hmm. And then I went to prison for it. Does that really? And the amount of money that I was selling was so low, like it was really could be like anybody could fall in that trap. That is essentially a free speech restriction, because it's the government saying everybody has to be licensed to transact with this stuff. But if you're licensed, you can't talk about it because then it's
I mean, even
advice.
if they would tell us that you can't transact in it, you could generically talk about assets and overallocation. That would be fine. But just give me something to work with.
Right.
And give me something to work with that I can actually see in writing, so that I don't get in trouble when somebody comes and tells me that I did.
It's been over 15 years.
Because there's no clarification.
It's been over 15 years. Like, there's no excuse for this level of ambiguity at this point.
Yeah.
I mean, like...
And especially, there's so many people that I've met that are in this side of the industry that do, consulting on mining, on the right machinery to go for like these, either... data centers out in the middle of natural gas fields or otherwise, but it's again, it's math, right? So it's like how many XYZs are you mining? What's the breakdown? What's the break even? What's the probabilities, right? And that's just math. Mm-hmm. So if I have a client that needs X amount of money and they could sell it, even not with me, and just say, okay, here, and let's convert that into exactly what they said. Let's put it into U.S. dollars denominated whatever, so that we know that we can take care of your expenses for the rest of your life. Wouldn't that be great?
I mean, I could show you some spreadsheets that you'd admire the craftsmanship of it, how well it instruments predictably returns on mining investment. It's not even a question. It's almost like a regular financial instrument where you see like, okay, it was going to be 5% over 10 years or whatever it is, like a CD or something, like it put this much electricity into it, this much Bitcoin comes out.
Yeah. Now let's talk about a solar flare. Let's talk about if that goes away, right? So I just wanted to show you you Bitcoin of the past.
Yeah, a bearer instrument that's non-cryptographic in nature.
So I was going through some files today, getting some estate planning done for a lot of my clients, and going and shredding out. Every year I go through and I start trying to find out some stuff that we can get rid of, and came across this from a client who has passed away quite a while ago. And I always found it fascinating, because insurance policies that we see today, you do it right online, you say, yeah, I accept, you send in your check, or you create your whatever. But those policies, when you get them and you print them on a PDF, they're like that thick.
Right.
So this one is dated March 1st of 1940. The annual premium was $33.49. It was a limited pay life insurance policy with dividends. The premiums are payable for 15 years and payable at death. And there was some different other stuff, but literally, this is it. And it's fascinating.
You can show that to the camera so they can see.
Oh, yeah. From a company that we may or may not have seen before, called Prudential.
Right. Yeah, we were talking about just before the
This is it.
This is it. That's the whole policy.
This is it.
Terms,
it's a policy.
conditions.
Terms, definitions, application, copy. Isn't that cool?
Yeah. We're going to see if we can't go in and redeem that at a actual Prudential.
Totally going to do it too. I think this
that.
would be a really great opportunity for us to go into, a Prudential branch. Just walk in and say, I would like to redeem my policy, please. And let's just see what they do with it.
They're going to
be like, what do I do with this thing? But this is, these are fascinating. This was an actual policy from 1940.
$33 buys $1,000 of coverage.
Yeah, exactly. So, yep. So you can do work without cryptocurrency and electronic.
Yeah.
It's just going to be a lot slower.
Right. ChatGPT, tell me what's going on with this policy.
Yeah, exactly.
Okay. Well, we're at the top of the hour again. I feel like we're gonna have a good. If we can get some of these folks to commit to sit down, we're gonna have some interesting discussions.
Yeah, I know that this whole weekend I'm going to do nothing but basically just crush through as many podcasts as I can from these different people, and hopefully one of them will sit down with us and we can have a really good, intelligible conversation that we can put up on the merge.
Fantastic.
Yeah.
All right. See you next week.
Take care.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.